Hello traders and welcome to another video review. Today is Friday, September 26, 2025. Let's take a look what do we have on the economic calendar for today. During the Asian session we got the data from the Japan in form of the Tokyo Core CPI, which is in line with the previous number 2.5%, what worse than the forecast of 2.8%. During the London session we have a Spanish GDP scheduled for release at 9 o'clock. Then at 11:30 we got ECB President Christine Lagarde to give a speech, and then we are apparently moving to the US session. Core PCE Price Index data from the US are scheduled for release at 2:30 together with the PCE Price Index and personal spending. Data from the Canada, GDP and wholesale sales are both scheduled for release at 2:30. Michigan 1 year expectations, inflation expectations, 5-year inflation expectations, consumer sentiment, all of this data are scheduled for release at 4 o'clock. Atlanta Fed GDP now at 5:30, and then US Barker Hughes Oil Rig Count and Total Rig Count data scheduled for release at 7 o'clock. So pretty standard US session for today. Not too many very important data releases. So without any further ado, let's switch to the chart. We start with euro dollar. For our chart of the euro dollar, extends the drop towards the level of 1.1647. Recent bounce was very shallow because we hit the extremely oversold market conditions on a 4-hour time frame chart. Nevertheless, the bounce just hit 1.1684. The level of 1.1727 will now act as the technical resistance for the bulls, and please notice that we are out of the channel, and we are below the 100 periods moving average. So out of the channel, below the moving average. This situation looks quite interesting for the bears. If we place some sort of the Fibonacci measurements from the highs of the wave A to the top of the wave B, let me just move it like here, for example. You can see that we've done we've broke 61%. We've broke 78, which is very close to the technical support, and the target is still located at 1.1622. This is the 100% target, which might be very interesting for that situation. So please keep an eye on the current wave progression. ABC to the downside doesn't actually looks like it is right now completed, so we might see a little bit more to the downside quite soon. So euro dollar bearish. How about the British pound? The British pound bearish as well. So just as we planned, after the very big reversal and reversal candle and the rejection of the trend line breakout, we went down towards 1.3452. A little bit of the pullback towards 100 periods moving average, and then big movement to the downside back to the lows of the wave B, 1.3331. Local low made a little bit lower, 1.3323. Market conditions are extremely oversold, and now some kind of a bounce is being expected, but we got the technical resistance. 1.3415 is the technical resistance, and 1.3459 is the technical resistance. So both of these levels would act as the technical resistance. The outlook remains bearish. However, we can see some sort of the pullback taking place right now. No trigger for the US from the UK to move this in the other direction. Finally, we have a breakout on the US dollar versus the Japanese yen. Local high was made at 149.94, and now we broke out of this channel, of this range here. So the level of 149.17 will act as the newest technical support this time for the market. So let me just remove this supply zone, and now it is a it's not a demand zone yet, but it's just a regular typical, there you go. This is support levels, right? So we need to test it in order to see whether this can be the demand zone, extremely overbought market conditions, some sort of the movement to the downside is now needed, some sort of the pullback is needed on the US dollar versus the Japanese yen. On a daily time frame chart, it looks like this. So the next target for the bulls is located here, 150.85, the next technical resistance. There is one more level historically very close to this one, 151.22. So we got pretty nice zone here that might cap the bullish rally momentum. On a daily time frame chart on this market is very strong, positive 64 points, indicating bulls to move to have a control over the market. So let's take a look at the US dollar index, because it looks like the market is moving higher. On a daily time frame chart, we hit the 100 periods moving average, which is at 98.35. Momentum is positive, 56 points, so that's fine. On a 4-hour time frame chart, we can see big movement, just as it was on the US dollar versus the Japanese yen. That's why we are looking at this market. So what is the next target? 98.90 technical resistance, and very close there is another technical resistance at 98.70, and I guess there will be 98.60 level here. Yes, so all of these levels they do the job. This is the supply zone. Local high was made 98.58, so 2 pips away from the lower line of the technical resistance, and the pullback is now in place. Market is coming off the extremely overbought conditions. The same situation as it is right now on the US dollar versus the Japanese yen. So it looks like we might be witnessing some sort of the test of possibly this level here, 98.06. Or maybe even 97.78. Okay, so that's the situation with the US dollar index. One more thing, I'm just wondering whether we can place some trend line here to see. Yes, we have a breakout. If we place the trend line here, or maybe even like here, we still got the breakout. So the trend line should provide some sort of the support for the bulls. So if the US dollar is gaining across the board, US dollar related pairs are going lower, what is the S&P 500 doing? S&P 500 is extending the correction or the pullback. After hitting the upper channel line and the level of 6,697, we went as low as 6,567, where the 100 periods moving average is on a 4-hour time frame chart. But we are still a little bit higher than 6,550. This is the technical support, right? The nearest quite important technical support, and the low from the September 17th. So right now it just looked like we almost hit the extremely oversold conditions. There might be one more push to the downside, however the dips are being bought back up. So right now maybe the scenario would be S&P 500 and the other indices pull back to the upside. US dollar related pairs pull back to the upside, US dollar index pull back to the downside to cool off a little bit these days. And the Bitcoin, what is Bitcoin doing? Bitcoin keeps coming lower. As I said, the target is the low for the wave A, which is 107,385. So right now this level here will act as the technical resistance, 111,055. And further downside movement is being expected here on the Bitcoin. So the general situation here on the market this week is dollar is the king. Dollar is gaining across the board. US dollar related pairs except the US dollar versus the Japanese yen are all going lower. US dollar Japanese yen breaking out of the range. S&P 500 continues to pull back lower, and the Bitcoin is continuing this nice pattern to the downside as well, aiming the level of 107,000, the low of the wave A from the August, last day of the August, first day of the September 2025. Possibly this will be very, very strong monthly candle for bears, because with that situation there's only a few days left for the end of the September. We got the movement to the upside and then big movement to the downside, so big upper shadow might be left on a monthly candle on the Bitcoin, so that it is as well quite interesting here on the Bitcoin market as well. Nevertheless, let's wait just a few days more to see what is going on. Monday, Tuesday will be definitely better day to see what is going on the Bitcoin monthly close. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.